traders. So things developing pretty much, to plan, in terms of US dollar strength. Since we had the breakdown that we warned about on Monday, and we confirmed it with yesterday, the dollar index breaking above that previous high, it's just been pretty relentless US dollar buying. Now the big fear was yesterday that Yellen would be, as potentially open to the December rate hike, or just talk about inflation in ways which was dovish. But she came across quite hawkish in many ways, saying that it would be prudent to wait for them to raise rates, because of low inflation, casting into doubt why inflation is so low, and still playing up the ability for the strong jobs and the strong growth to dictate that they raise rates more still. Now, in the longer term, there was the sort of idea that lower inflation might limit the amount of rate hikes, but in the short term, it wasn't really played out that they were considering stopping rate hikes right here. So that really sort of continues to put upward pressure on the US dollar, and with the chances of the Fed rate hike in December still remaining quite strong, then the next big piece of information that the market was looking forward to is the Trump tax plan. Now, that was leaked during yesterday's session as well, and it was all positive and open. So far, the Wall Street was very receptive to it, and the US yields were very receptive to it. So you're seeing a very strong US dollar, especially dollar yen, which is completely recovered from the North Korea warnings about war, and is pushing now that 113 level. In fact, it's actually under where it should be, given the rise in yields, which we'll look at shortly. And the rise in yields suggest we should be close to 114. But you are getting a fair bit of selling coming through on the euro, which is behaving itself quite nicely in this pullback. It's a slow pullback, but it's it's getting to these key levels that we talked about, really being interested in seeing how the market reacts. If we get some nice price action of 107.20, we'll be buying the euro here, just because the story behind the euro is pretty strong, and it should be able to hold some levels. So the 17.20 level is pretty important. The 116 level is critical. If it breaks that, then maybe we'll better off. Sort of like if the dollar yen somehow gets past 114, 114.50, that really opens the door to resumption of US dollar strength. But my working premise is that the US dollar strength is sort of reboundy and correctionary more than start of something big and new. And the story behind the pound rally, with the Bank of England raising rates in November, and the ECB taper plans in October, those are big stories, and they'll have a chance to play out in October. So the US dollar is a bit of a timing thing, a little bit of a repricing of the Fed, and a little bit of optimism about the tax plan. The tax plan is completely unfound, in terms of the reaction to it so far. I mean, it's in the golden, moment. Everyone's really happy, right? But if you look into, there's no specifics yet of how they're going to fund this. And there's already been a couple of reports out about how it's going to add $5 trillion to the deficit over 10 years. The Democrats have not got on board. So that makes it a little bit more fragile about how it's going to get passed. But right now, that's not what the market's focused on. It's focused on the specifics of the details, enjoying the nice US dollar rally. But if it becomes unworkable, like his healthcare plan, then the rally will be in danger of unwinding, or at least tapping out, right? And once we get a top-end resistance in this US dollar, and it could be towards that 94 here on the dollar index, could be when the euro gets to 117.20, could be when the euro gets to 116, and when the dollar again gets to 114. That is where I'll be looking for a bit of US dollar weakness, and mainly I'm going to be playing it through euro long, euro yen long, pound yen long. All these should be well supported, but staying away from dollar yen long at the 114 level, and staying away from trying to sell the euro, or just buy the US dollar in general after a couple of day rally here, because it's to me, I mean, while I understand it, and we talked about it happening, it looks much more correctionary than the start of something more deeper. And I think the burden of proof is on the US dollar to show substantial ability to carry gains after say a week-long rally. than it is on for the euro to be broken down. So the euro story is pretty strong and it has legs, and the Aussie story is pretty strong and it has legs. So the Aussie buy zone is just down here around about 77.50, under 78 towards 77.50, and that's if you believe this is just a correction and the US dollar strength is going to be struggling to kick, then buying the Aussie or buying the euro soon is the trade, or buying the pound, is the trade. I bought pound a little earlier, but a little bit keen in the Asian session, a little too early, maybe 2 or 3 days too early. But pound should be fine as well. I mean, it's a pretty strong story behind the pound. The area where you might see sustained US dollar strength or underperformance is gold, with risk being on and talks about North Korea, having dialogues with Russia, and the view there is that Russia and China gives North Korea a security guarantee, and North Korea disarms, and then they get aid. Right? That's the most optimistic endgame in the North Korea drama. So they get security guarantees against America from China and Russia. This is what's being talked about between Russia and North Korea at the moment. And then they have to get rid of their nuclear arms, and then they get lots of money from America. That's the story, and that seems workable. It seems workable with the exception of Trump. Trump is probably not that open to that. That will look weak, maybe to his eyes and to his constituents, and so maybe that won't be as easy to push through as you might. Because that to me was, when I heard that, this is what's going on between Russia and North Korea at the moment, I thought, that sounds completely reasonable. And that sounds like a way out of this without a military conflict. The US, the Trump side is the hard part there to put into that equation. He hasn't really been the statesman, or he's taking on Iran as well. He can't be seen as, I don't know, doing a bad deal, as he might put it. So that's not usual in this part of the city. So that was back in the day, you guys, when we were doing in Chinatown. I got a lot of the sirens. That's one of the first in the stream for a while. Noise behind your voice cutting in and out. Let's have a look here. It looks pretty good on the upload meter. Alright, just 1 second. Just 1 second. Let me see if I can get the background noise lower for you guys. Alright, just 1 second. How's that? Is that a little bit better? We're in lockdown now. Yeah, it's quite a noisy city. I mean, all cities are noisy, right? It's and we're pretty close to some main streets here, so that's the case there. So, I expect the dollar yen to push high here. Let's have a look at the yields here. So the yields are pushing up right up against this 2.3 level. That 2.3 level is critical to the US dollar rally. If we break and hold above 2.3, then I suggest that dollar yen will be very easily, comfortably getting to 114. And if it continues to rally, that's the way that euro goes to 116. And if it even somehow just gets out of control, the rally in the US yields, then US dollar can have a bigger than expected rally. That would be one of the ways that can happen. Also, if the tax bill looks like it can get passed, the US dollar can have a bigger than expected rally in this rebound. But I think the burden of proof you still got to put on the US dollar strength, rather than the I'm talking medium term now, after the next couple of days, rather than expecting this to be sustainable And so yeah, that's, I mean, look, we'll see how it plays out. We're going to be really interested to see this price action coming up soon. This next level is the first level. I've been actually, you know, hoping for this pullback for a while. It's careful what you wish for sometimes, right? You get the pullback and then you're like, well, put your chips on the table now. You're gonna buy the euro on the pullback. I mean, I am. It's just I do want to see some buyers first, some stabilization, and then we'll get into that. Stocks look really strong. DAX looks really strong. US probably going to make fresh highs if enthusiasm for the tax plan is continuing. Trump's going to give a big speech today at the end of the US session, so that's around 5 AM my time. We're looking at around 8 hours from now. You get really used to the traffic noise, Jenny. It's the brain has the ability to filter out sort of standard noise pretty easily. But yeah, it's I don't get sick. I do get sick of the zebra crossing sound. That's quite loud, especially during the working day. But you know, it is what it is. You can't live in this middle of the city without sound, and so the convenience is huge. Literally a 3-minute walk to work. So these levels coming up. The pound is still well above the the 133 level, but it's getting more support on dips. The support's coming through mainly on the pound yen and the euro pound selling. So the pound yen, the main reason I bought the pound actually is because I thought pound yen would go berserk today. It's going higher. I should have just bought pound yen. Buying the pound was a bit silly, but yeah, the pound yen buying and the euro pound selling, it's at fresh lows now, is the main catalyst here for the pound outperformance. So and this really can continue quite quickly. Fresh highs is on the cards in the next couple of days if stocks remain so strong and continue to rally on the back of optimism here. Aussie dollar, yeah, you got to be patient, I suppose, with the Aussie dollar. It's like in no man's land a little bit. It's not like it's reacting to risk on or risk off so much. It's purely a US dollar play, right? What's happening here? So the US dollar strength, and you get the Aussie falling, you get US dollar weakness, you get Aussie rising. The commodity story is sort of backed off, and the RBA story is so far away in the future that you can't rely on it to provide you with support on dips. And the commodity story is sort of fading a little bit, and the pullback in copper and iron ore is on the, is taking away some of the catalyst to be ultra bullish on the Aussie. So it is really like a neutral currency almost right now, pushed and pulled based upon the US dollar more than anything else. So it's not really one that I'm super keen to buy straight away, but I do understand the significance of that 77.50 level, and we'll be probably testing that level. If it bounces off it or holds, then I'll probably be buying there. Is the way to play it. ASX as well is bouncing off some key levels. So if you've never traded the ASX, it's one which is quite interesting. Let's have a little look here. ASX is just range trading beautifully, right? Beautifully range trading. I've been to a 150 point range here. So this is quite easy to trade, and you just keep on buying the dips, keep selling the rallies, and it's working out quite well. Obviously one time it's going to break, and when it does break, given that the market's been in this consolidation since May, it's probably going to be a big move, 200 pips one way or the other. But at the moment, this is one of the most stable range trading periods I've ever seen, and so it's not a bad little pair to be trading. So if you've never traded it there, you can have a look at it. You might be a little bit late to this party, but it is actually not a bad indice to learn. If you've never traded indices before, ASX is not a bad one, and it's relatively gentle. All right, let's have a look at how the market's playing, what the banks are making of the tax plan. Everyone seems quite positive from what I've read so far, but let's have a look at what they're saying here. We'll start with the early morning read. What part of the city am I in? I'm in Market Street in the CBD. So, right in there. Can't get more in there. You know, the Japanese yen story is so weak. The outlook, without North Korea, without a stock market correction, it's really hard to make the case that Japan's yens can somehow rally, especially if US dollar holds up and the euro yen, pound yen get involved. You know, 500 to 1,000 point rally in the next 3 months is really on the cards. Let's see what the new PM tries to push through when they're campaigning. He always tells little stories at the start, and now he's talking about his nanny resigning. Let's have a look at what his take on Yellen's speech was. A few mixed messages. Bond market seems slightly hawkish bias. Yeah, that's the takeaway really. You know, slightly hawkish, but short-term hawkish, long-term a little bit dovish. And she said this again. She said this before. Should be wary of moving too gradually. So the tax plan, as we've seen it so far, is cutting to 20% and cutting the tax plan, the main tax rate, the top tax rate, sorry, to 35%. And this is the big one here. Companies looking to repatriate profits to US, there'll be one-time tax. Now that's a big number, right? That's trillions of dollars of US dollars coming back, and that's where you know you can get big US dollar moves, and that's half the reason the US dollar is so strong. In the first half, or first little bit of the year, was on the back of that idea, which he talked about in his campaigning a fair bit. But yeah, what we have, the problem here is how you're going to pay for all this. This is quite big tax cuts, and they've already got such a big deficit each year. Obamacare was definitely dead yesterday, so the repeal bill failed to get the votes. So I don't even think they're going to run the. That's probably going to be put back on the agenda. Maybe if they can get something passed, get a little bit of cooperation with the Republicans, but you know, something else other than healthcare. And they seem to be talking up this as well. This is a short-term effect. So the German election, they're still not sure of the sort of power sharing alliance they're going to make, Merkel, to get that passed. At the moment, you know, but that should be solved much quicker than New Zealand. New Zealand dollar's problem is that the the guy came out today, the Kingmaker, who said that he's looking at both Labour and the Nationals, and said that he won't have an answer until at least the October 7th, when that's when they expect all the postal votes to be counted. So that's that opens the door to downside in the Kiwi for the next couple of for the next week at least. And it's a little hard to be upbeat on the Kiwi at the moment, given that story. It's and you know that the Kiwi overshoots all the time, so it's like, well, how long is that going to last? But this might just disappear really quickly, that German part. All right. Currency is a buy again, better to play in the crosses. All right. Yeah, so that's like Euro Yen. So the 200-day DMA coming up here on the let's have a look at that. We know that this cluster of support was interesting yesterday and the market bounced off. It did roll over again though, so it's back onto the downside. But if the 200-day, don't discount that. That's some that's a level that gets a fair bit of attention. So it's only a little bit lower than we are now. So if Merkel does, I mean, if the Euro does somehow overshoot, then Aussie will be dragged lower, but I don't know, it doesn't seem to me like that's there's just a repricing here of the Aussie going on more than anything else. But the next move for the RBA is raising rates. It's just about the timing. The RBA has been very keen to push that timing out, very similar to RBNZ, very similar. The RBNZ is actually you're going to get the OCR tomorrow. We're not really been paying attention to it because there's so many other stories going on in New Zealand, but RBNZ will definitely continue to be talking down, dovish at best, neutral at best, dovish at worst on the Kiwi dollar. Dollar CAD also just ran with the US dollar strength. Didn't really kick on past 124 though. That was a little surprising considering the weakness that we've got in some of the other pairs. It's actually holding up pretty well, and you got the reasoning behind that given the given oil's outperformance. But let's see if we can get a little bit higher here before we look to sell dollar CAD. You have to be sitting on the fence anywhere if you're trying to sell the US dollar. You have to wait for this US dollar rebound to play out. So it's good to be patient here. Yeah, Aussie Kiwi isn't helping the Kiwi dollar weakness isn't helping Aussie Kiwi. Yeah, okay, but this is not the hugest move in the world, and it's more Aussie weakness than, it's not like the Kiwi is strong, right? The Kiwi is pretty weak today, and so the Aussie Kiwi is just the pace at which the Aussie is folded and breaking down is at this point a little bit faster than Kiwi, which has already had a little bit of a couple of bad, weaking. So this is not too big a story. I was looking at the Aussie Kiwi actually to buy soon, like relatively soon, like you can buy it now. If you think that New Zealand's going to underperform just in the next week, than you know, buying the Aussie here, Aussie Kiwi. The RBNZ probably going to help you. It's unlikely to hurt you, and it's mostly a timing thing. You probably you want the market to start to feel that the Aussie Kiwi is going back up again, because this is a pretty big rally. This is a nice pullback. You've got reasons for it to resume anyway, right? You don't even need this this election risk to be buying Aussie Kiwi. It's just it would help. It helps. So I don't know. It's up to you, your preference. What I don't like about this is the Aussie's weakness, and where the Aussie dollar itself is. You know, it's still got a little bit of room to move here, and so you know, you can't really rely on it's not clear. It's not clear at all. You know, that one currency is stronger than the other, and I don't trade really technically. I like to trade a story, and so there's no story here to back it up apart from the Kiwi weakness, which can disappear if all of a sudden he chooses a side, right? So you know, he's not supposed to choose a side, but if he says he's leaning one way or the other, that's enough, right, to get the Kiwi to snap back. Potentially, as long as he doesn't choose Labour. If he chooses Labour, then you know, there's a problem. I'm not going to do a big one today, boys, because not too much has changed since yesterday, and we had a pretty big rant yesterday about what's going on in the market, why it's happening. So what I would be focused on today, though, if you are in the market, you've got a little bit of US data at the start, but really what everyone's focused on is the US 10-year. So keep an eye on it. If it breaks 2.3, you've got yourself a reason to expect that next leg of US dollar strength. And then if nothing happens throughout most of the US session, or if stocks are strong, but you know, there's a bit of hesitancy here in the US dollar rally, then you wait for the response to Trump's speech. Trump's speech is probably going to be the catalyst, you know, for the next leg of US dollar strength if it's taken well. Conversely, if he comes across like he's, you know, not ready to deal to get his tax plan passed, or if he goes off topic, or if it's just not a, you know, good performance, or it just looks unrealistic, then and especially how the Democrats respond to it, because the Democrats haven't really responded yet. Maybe if they hear the speech and they all come out ultra negative, or if a couple of the fiscal conservatives come out and say we can't pass this without seeing how the revenue is going to come in. You know, where's the tax, where's the savings from to pay for this? Then you could start to see some of the enthusiasm, which is, you know, being enjoyed by the US dollar in the last 24 hours anyway, start to be unwound tomorrow during the Asian and particularly the US session tomorrow. If the speech is not received well, and the, you know, the news cycle in America is pretty important, and the news cycle goes on to the Democrats saying that the tax bill is pretty aggressive, and the partisanship in America is really quite intense right now. Like I can guarantee you there will be ultra negative slants put on the tax plan within 24 hours, right? From the Democratic side, and the anti-Trump members of the Republican, you know, or the people who have been a bit of the outcasts, you know, those guys as well could easily come out and say that they're not supporting this, right? Because it is a pretty controversial. There's ways to easily find, you know, issues with it. So it's to me the little positivity that we've got going on from this tax plan, I doubt is going to be sustainable, and you know, I suspect within this week that there can be doubts put on it. So we'll see. I really think it's going to be hit every way right. So you know, the whole left-wing media in America will just go straight after it. Half of it because it's Trump, but you know, or it's just like a little gift as well, considering the size of the tax cuts to the rich and to the corporations. It's perfect almost for the Democrats to go after this aggressively, after they just had a victory of the healthcare as well. So yeah, don't think this is going to be easy at all for Trump. Alright guys, best of luck in your trades. Just be a little nimble, be a little careful. US dollar strength is continuing, but you know, there's not too far till we get to some big levels, and then we get to see the judgment, and keep an eye on those US yields, see if they break into key levels, which can fuel that next leg. Otherwise, we might see a little bit more two-way volatility in the tail end of this week. I'll put a little buy order in. I talked about buying here, so for so long, I have to do it, right? I have to do it. It's I can't talk about buying at a level for a couple of months and then not buy it when it gets down there, right? It's just I mean, but what you should do is wait and see the price action down here. Wait for a little bit of buying, but I sort of have faith in how this tax plan is going to be received. So we'll see. We'll have an update on Friday. I'm not streaming tomorrow, so Friday we'll have the update. By Friday, we should have the response from the Democrats and the fiscal conservative Republicans.